Welcome back to our account review series, a series where we take a deep, unfiltered dive into our traders' metrics in their accounts. We're going to show you how these traders pass their evaluations, some mistakes they made along the way, and how you can avoid making those same mistakes. The trader we're about to look at has been trading with Alpha for over a year now. They've managed to actually secure a payout of $2,100 with Alpha. They're currently looking to get a payout on their latest swing account. They said they've passed 3 and failed 5 challenges. So taken 8, passed 3, which is nearly 50%. That's actually incredibly good. And I think a lot of traders out there would love to pass 50% of the challenges that they've attempted. They've said, I've tried refining my strategy from last year where my trading was not consistent and have journaled numerous backtested trades with the current strategy I'm using and have used to pass my 10K account with Alpha. Journaling, backtesting shows that they're taking this seriously. The main problem they say they're facing, working out lot sizes. They said, I seem to be getting confused with calculating my lot sizes with some of my trades. This has meant on trades where I should have made 4%, I made 2%, for example. Okay, looking at this trader's dashboard, we can see a lot of green, which is a positive sign. They said they've passed almost 50% of their evaluations, and we've already said they managed to get a payout. This comes down to what they said about being consistent, having a strategy, backtesting, getting the data. This shows. I think the biggest highlight of this is in the verification stage on their latest 10K swing account they got with Alpha. We can see an upward sloping equity curve, but it's nothing where it's just a one win that gets them to their target. It's not very erratic, it's just consistently moving up because of sticking to the strategy. You can see here that the average profit was $81, average loss was 75, so the average win rate was about 1-to-1 with a 53% win rate. That's just indicative of a trade that has an edge. Got a more than 50% win rate, more than 1-to-1 risk to reward ratio. This trader has just stuck with that consistently. It may not seem glamorous or look glamorous, but this consistency, this chipping away at the target until you reach it, that really is the key to succeeding with these challenges, and this trader has proven that. This consistency was shown in the verification stage after the evaluation was passed. That is very often when traders will not be able to handle the pressure because they've put in all this effort to pass stage 1, and now they're on stage 2, and they've got that added pressure of trying to pass. Or sometimes they might just be overconfident and be like, well, I passed the first one, so let me just go for the second one in one trade or something. But no, in the verification stage, phase 2, this trader showed consistency and sticking to their plan, which is fantastic. Now here on the funded account, which we all know is where the pressure really mounts, this shows maybe a little bit of bad psychology slipping in. As we see how it started, the same sort of upward sloping equity curve, but then we see a big drop down, a 3% loss in one trade, not even just in one day, in one trade. Potentially that overconfidence we were talking about, we've got all that upward stepping throughout the phase 2. Now the same thing happening at the start of phase 3. Maybe just thought, yeah, I've got this in the bag, let me just over risk and try and get a massive payout, and it's backfired. And it just shows, you know, as soon as we start to get overconfident, as soon as we start to fly a bit too close to the sun, like Icarus, we do get burnt. So the way that we pass the evaluations is the same way we get payouts, is just consistently applying the strategy, not over risking. And here we can actually have a look at the trade, the entries and exits of this particular trade that lost this 3% drawdown here. Okay, looking at this gold trade, it's actually quite a painful one. We can see entering here initially on this buy, getting a little bit of profit and then going down and down and down. But the thing is, when we zoom out, we can see the gold was just on this absolute bull run at the time. It just kept on going up after and just got taken out at the very last minute. But that was perhaps what was in the trader's mind, and maybe that's why they were willing to risk so much on this trade. We can see like a 3% loss. If their normal stop loss would have been potentially higher up than that, maybe they moved it. But yeah, 3% loss on that trade. Very unlucky, and we can see it just took them out before going a lot higher. That is the sort of thing that can frustrate someone, can get them tilted, can make them just go on a trading rampage and blowing an account. So while this trader did potentially over risk, I mean, you shouldn't be losing 3% in one trade for sure. They didn't let that stop them, and they've come back and now they're back in profit. So we can see the next trade they took, the very next trade, was on Euro USD. Maybe they decided to move to a different asset. Maybe they were, in a bad mood with gold after that particular instance, because all the trades before this had been on gold. Now we can see on Euro a buy. So if we apply this indicator here, Asian session range, I believe this is the strategy that this trader was using. We had a sweep below the Asia low. We can see in this trader's metrics actually that a lot of the trades are taken at this sort of same time of the day. So perhaps that's the strategy. Just speculating here, but we've got a sweep below the Asia low, and then on this push up, they've decided to trade away from that, covering this intermediate low down here. What seems to be a one-to-one risk-reward ratio is what their metrics are showing. Yeah, we can see on the account metrics, average profit $144, average loss 126. So that same sort of just over one-to-one risk-to-reward ratio. We're assuming that that's what's being targeted here. In spite of the 3% loss, managed to take this one for a good 1.5% profit and is now back up in profit, $500 in profit. Hopefully going to be getting a payout soon. So one, don't over risk because it never pays off. And that was unfortunate in that trade, but that's always the way it goes. The times you over risk are always the times you get unlucky. It's always best to just stick to your rules. This trade did so well through the verification stage and so well at the start of the funded stage. You know, you don't want to do anything silly and potentially ruin it. So they recovered, stuck to the next trade, from what I can tell, was following a strategy, perhaps a strategy they were using, and they've managed to recoup those losses and on their way to a payout. So this trader actually got a $2,100 payout from a previous account they had. This one looks like they're on the way to another one, and it shows what can be done if you just trade consistently. So have a plan, don't over risk. It doesn't need to be anything too glamorous, you know, just small, steady wins gets you to the target in the end. Hope you enjoyed the breakdown of that trader's valuation and previous history with Alpha. If you would like your account to be evaluated on a video just like this, go to the Alpha Discord and there'll be a place there where you can submit your account for potential breakdown. Say subscribe to our channel for other amazing content just like this, and we'll see you in the next one.